What is up, YouTube? This is your boy Sabelo, and I'm back with another video. And in this video we are going to be doing analysis for the upcoming week. I'm going to be giving you my perspective into the market, what I am anticipating, and what are the trades that I'm looking at, the type of setups that I am looking at for the upcoming week. And just like you saw on the thumbnail, we are going to be looking at three pairs. There will be your DXY, your USDCHF, and your EURUSD. Okay, so this is our DXY here, and we are going to switch to a higher time frame. I normally start my analysis on a weekly time frame, and I switch to other time frames as I continue with my analysis. But for today, I'm going to be starting my analysis on a daily time frame. So okay, so we're going to be starting our analysis on a daily time frame, and this is our DXY. So basically what DXY is the dollar strength index, and this is how they measure the strength of the dollar. So the whole idea behind analyzing DXY and utilizing DXY in my trading strategy is that DXY is an index, and index they tend to respect the structure heavily compared to currency pairs. And once you incorporate the movement of DXY with the currency pairs that it affects, such as any currency pair with the USD, that will be like it will affect currency pairs with USD as a base in a directly proportional way, meaning that if you see the dollar index being bullish, then you would anticipate, or a pair with USD as a base currency such as USDCHF and USD CAD, you'd find those pairs being bullish as well. And then any pair with DXY being a code currency such as EURUSD or GBP USD and ZD USD or AUD USD, you'll find those pairs being bearish when DXY is being bullish. Okay, so now that we have covered the basic explanation of DXY, we will get into our analysis. So the first thing I would look at is my current lowest low. There are structures way below that will be very clear structure in a weekly time frame, but they are very far from the current price action, and we want to focus close to the current price, which is currently here. So this is our swing low, which will also be our resistance level, and then this area here would be our swing high, and that would be our resistance level. And then we'll switch to 4 hours time frame, and then we will see what is the market giving us. So basically what the market does is it simply moves from zone to zone, from structures to structure. So this is the resistance level, this is the support level. The market would move from this resistance structure all the way to this support structure here, and whatever we capitalize on is how is it getting to this structure. And once it is here, is it breaking this structure and changing in this structure, and it pushes to the next structure that is going to be support. And once the structure is broken, it is going to serve as the opposite structure. So whenever a support is broken, it is now potentially going to serve as a resistance. Same goes for your resistance as well. Whenever a resistance is broken, it is potentially going to serve as support, and that will carry the market from that current structure to the next structure. Okay, so now we look at our inner price action on a 4 hour. Okay, this is the recent structure that the market respected significantly. As you can see here, this market, once it got to the structure, as it was pushing from this area, it pushed all the way up, it got to the structure, and then we had a drastic move away from the structure, as you can see, it hit the structure, and then we had a very huge movement away from the structure, and this market hasn't been to the structure for a very long time, and it has been consolidating around these areas here. And one can also look at the structure at this area here, okay, at this area here as liquidity that was left by a market, and this could be liquidity grab by the market, okay, and then this movement to this area could be liquidity grab of this area here, and then once the liquidity grab is done, the market will push to the downside. So that is the anticipation. And if we take a look at how the market reacted to the structure previously, we had a very huge bullish candlestick approaching this area here, and once it hit this area, we normally know that if you see a huge momentum or huge candlestick approaching a zone, you would want to disregard the idea of that structure holding that market and allowing the market to react and push to the downside. So we see that this area is a very significant zone, as it held a very huge momentum of the market. And now we can see that currently the way that the market is approaching the structure is we had this candlestick here, this bullish one, being a very huge bullish candlestick, and then the following one, they started losing momentum, they started decreasing in terms of size as they are approaching this structure here. So now we would anticipate that this market is going to react to this structure, okay. We would anticipate a reaction of the market from this structure to this area here. Sorry, we would anticipate a reaction of this market from here to this area here, or in order for us to find an accurate, we would take our Fibonacci level, we put it at the start of this huge impulse movement, we drag it all the way to the top, and then we will anticipate maybe a reaction to this area here, which is our 0.5 retracement zone, or this 0.618 retracement zone, which happens to be in line with some structures here. As you can see, it also happens to be in line with this order block that we have here. So that will be our anticipation for DXY, and all we have to do now is wait for the market to give us proper price action at the resistance level, and then we will see if our short trade or sell trade is being a very valid trade here. So whenever our short trade is playing out here, we will also be looking into selling USDCHF and buying EURUSD or GBP USD. So that is the analysis for DXY, and then all we have to do at this point is wait for the market and see how is it reacting to the structure. We anticipate a short, but then the market tells us what we do. We trade based on how is the market reacting to the structures that we are looking into. Okay, so that concludes our analysis for DXY. Okay, let's look at USDCHF. Okay, I'm just gonna remove everything on the chart and we're going to start from scratch. Okay, we start on a daily time frame as well, and then we zoom out, we fully zoom out to try and see the overall price action that the market is giving us. Okay, and then once we get the idea of how the market is moving and where are the relevant zones, then we adjust accordingly. Okay, daily time frame, the only thing that I can easily spot is this area here, which is our current swing low. Okay, and then that one, but that is very far. Okay, that's one, that area there, that's our current swing high. Okay, then we switch into a 4-hour time frame, and always remember, it's okay to not see anything. When you don't see anything on the current time frame that you're on, switch to a smaller time frame. It is always going to give you more clarity and more details into the market, but you should always follow the direction of the higher time frames, as they carry more significant within the market. Okay, so this is the structure that we have, and if you pay attention to the structure, this kind of looks like how DXY was moving. DXY was also coming from a resistance structure, and it pushed all the way to a support structure where it had been consolidating for a very long time, and now it was at a very bullish movement approaching significant structures around those areas. Okay, so here we can also see that we have this zone in USDCHF. I like to keep my chart clean, so you can drag your zone covering all this structure here, but for me, I like to keep my charts clean and everything simple. Hence, I would consider starting my resistance line at this level and not having it cluster over more price action. Okay, so that's our resistance level that the market is currently approaching. So if we were to break the structure, okay, which one would we push towards next? Okay, and then this would be our next structure that we will push towards to. Okay, you see that I just put my line here, but if you look to the left, you can see that this area here was also a very significant level previously. I just don't like to highlight everything like this, as it tends to cluster my charts, and I prefer my chart to be clean at all times. It helps with my psychology. Okay, so we can see um that we had this market that was very bearish. Let's see, we can use our trend line to check here. Okay, we can see that from that area there, from that resistance, we have had this market being bearish from that level. Okay, sorry. Okay, that was the area. It's respected this trend line again there. This trend line was also respected here, and then our market also respected this trend line at that area up until it created this structure here, and that was okay. Okay, so we can see that we have been having a market that has been very bearish, creating lower highs, and then all of a sudden here it is creating a higher high or an equal high to this one. And if we are having a look at the bottom, this market is attempting to push to the upside. If we were to look at this structure from a pattern's perspective, we can also see an inverse head and shoulders here. Okay, this would be our left shoulder, and then this area here would be our head, and then we would have this area here being our right shoulder, and then we would anticipate a push to that structure like that. Okay, so now I'm going to clear that, but yeah, this is what I'm talking about when I'm talking about this inverse head and shoulders that we are anticipating here. It might not be clear on a 4-hour chart, so let's move to a 2-hour chart and see what our price action is giving us. Okay, now I can delete this trend line here, as my use for it is irrelevant now, as the use for it is in the past. And I know that based on that trend line, once the market break out of the structure, I would anticipate a push from the structure all the way to the completion of the 90% of the trend line, which will also happen to be in line with this significant zone. Just like I mentioned before, the market, it moves from zone to zone. All we have to do is find how is it getting to the next zone, and we capitalize on that movement as it approaches the next zone. Okay, so now we can see that this market, it also happens to give us the same structure as DXY. It is currently at a significant structure zone that was previously respected, as you can see here. Once the market got here, we had this very huge momentum towards the upside, and we had this market pushing all the way towards this area here, which was our support structure. And now we are having our market in the same structure, and the reaction of the market, if we look at the price action, we see it's losing momentum, as we are seeing candlesticks loses size. They start to even change color from being bullish, and now we see the presence of the bears as they start to change color. Then if we switch to smaller time frames, we can see on detail in more details that this market is losing momentum. Okay, I can also see the structure here, this being our channel here. So I would anticipate a short here. I would be looking to take a short in this area, as it is also in confluence with my DXY. So I'll be taking my short here with a 12 pip stop loss, and I would be anticipating this trend line here to be my take profit, and that is 88 pips, and that is a proper 1:3 risk reward trade. So I would be looking to execute a short on this trade based on the analysis that we have done here. Yes, and then I will be switching to my smaller time frames to wait for confirmation, or to look for more confirmation on price action. But yeah, I definitely see myself taking a shot on this trade, and I will be uploading the results of this analysis by the end of this week as well. So make sure that you subscribe. If you haven't subscribed, turn on the bell notification, so that once I upload the updates and how the trades went, and how much I made, and how much the community of mine made as well from this analysis, you can be notified and follow up with all of us. Okay, and that will conclude our analysis for USDCHF. Now we are going to be analyzing our last pair, which is going to be Euro USD. Okay, so this is our Euro USD pair. I'm just gonna remove everything that I initially had. We're going to switch to a daily time frame. Now you already know the drill. A daily time frame, we fully zoom out to have an overview of the market and see exactly where is the market coming from and where it is anticipating to go to. Okay, so this is the structure that we currently have on Euro USD. Okay, so we have this area as being our swing high, our current swing high, and then we would have this area here as being our current swing low as well. Okay, and then that is all that I can spot easily on the daily time frame. I'll switch to a 4-hour time frame. Okay, and then we would analyze for more for more patterns and structure as to what is the market giving us. Okay, and as we can see as well, this market was coming from a support structure. Remember what I said? I said that this type of instrument that has USD as a code currency, it would move in the opposite direction as DXY, and DXY would move in the opposite direction to the structure here. DXY was coming from a resistance structure, and then we have Euro USD coming from a support structure and approaching a resistance structure. We just recently rejected the structure. And if you also have a look here at our Euro USD, it has been in a consolidation phase for a very long time, and it just recently broke out of this structure, just like how DXY was doing when we were analyzing DXY. Okay, I won't lie, this has been a very ugly price action, but then if we have a look at this structure, we can kind of find similar structures than the other pairs that we just recently analyzed. We can see that this market recently was pushing to the upside, to the downside. As you can see, this was the trend line that broke here, initiating this heavy push to the downside, and now we are currently approaching this support structure here, which previously had held this market to the upside, and this market hasn't been into this zone since the 10th of April, and it is only getting back to this structure now, which is the 12th of May. So there is like a 30-day period, so we would anticipate huge reaction to this structure in the future as well, once the market gets to this area. So we have this area here where we anticipate the market that is going to react to. Okay, now we would switch to our time frame to get more insight into our price action. Okay, so now we are looking to capitalize on the buys from this structure, as we can also see that this market has been in a very bearish trend for a while now, and we know that as much as this market is pushing towards this area here, the market doesn't move in a straight line. It has to move in waves. We have to have an impulse and a correction in order for the market to not crash. Otherwise, everyone will be making money in the forex market if the market were to move in a single straight line. Okay, so it's simple. What we are anticipating here, we are anticipating a long trade or a buy trade once the market gets here, and this will be a very great trade. As you can see, we would be at a point where we would have our entry here. As soon as this market reaches this area, we would anticipate our entry once it has given us the proper price action confirmation in terms of the bears losing momentum and the bulls gaining momentum in this area here. And then once we have the proper price confirmation, we would enter there, and we would anticipate our take profit around this area here, which is our previous significant structure that can be highlighted here, as you can see. So we would anticipate a buy from this area to that area there. Then switch to the 1 hour time frame. Let me just remove this. Okay, and also this, remove that as well. So at this point, it's just a matter of a waiting game. We have to be patient for the market to reach this area and see how it is reacting to this area. And once we get the proper reaction that we are looking for, when the market gets into this area, we will be looking to take a long from here all the way to that area that we were anticipating. Um, that is the previous significant structure that we anticipate a retest of, and this trade would be more than a 1:3 risk to reward trade. As you can see, we have a 12 pip stop loss and a 100 pip take profit, and we would execute accordingly and see how it plays out. Okay, and that brings us to the end of our video for today. Those are the pairs that I'm anticipating to take trades on for the upcoming week. Let me know what you think of the analysis. Make sure that you subscribe, you like and share the video. Leave a comment below of any topic or any type of information that you would like us to share or to make a video about, and then we will definitely look in our comment section and come up with those videos that you would like to see. With that being said, I appreciate your time. I'll see you on the next video.